Hi everyone, my name is Michael Chang and thank you for joining me today for my presentation on investing in short-term rentals. Short-term rentals has provided financial freedom for my wife and we wanted to share our journey with you, how we did it, and some concrete next steps if you're interested in pursuing this. Now you might have seen me on social media, either on TikTok or Instagram, and I look forward to sharing this information with you, and hopefully if you have any questions, please reach out to me. So let's begin. So just a little bit about me. I'm a 42-year-old professional Airbnb host based in New York. We lease and manage 20 units in Philadelphia, so lease arbitrage in Philadelphia, and we've taken that money to buy and operate 6 vacation rental cabins in the Smoky Mountains. It says 5 there, but we just bought another one last week, so we're at 6 now. I live in New York City with my wife. We have a 7-month-old daughter, and we have a 16-year-old pup named Winnie. And both my wife and I work on this business together, and it's really given us a path to financial freedom. We work from home, and we're able to take care of our daughter and enjoy our lifestyle. So my background is in finance, in investment banking. I worked 10 years at Citibank and Bank of America Merrill Lynch, advising technology companies on M&A, and I got my MBA from Cornell in finance in 2009 and have lived in New York ever since. So why short-term rentals? Out of all the possibilities out there, you've probably seen things on Amazon FAB, other kind of side hustles, but why Airbnb short-term rentals? The reason is cash flow. It cash flows like no other business I've seen. And I've seen a lot of businesses in my career. For real estate, it offers almost up to 10 times as much cash flow as long-term rentals. Additionally, you can increase the value of real estate investments with this strategy by self-managing it yourself and showing that cash flow that you can generate for investors. Now, for us, we have 26 properties. We live in New York City. It's a high cost area, but if I was living in a lower cost and I was single, 1 to 4 properties really could set you financially free. 4 apartments in Philadelphia, if I take the average, they do probably $15,000 a year. Now 4, that's $60,000 a year in free cash flow. Might not seem a lot, but if you take that and with all the tax advantages, that's almost $100,000 job that you can use this strategy for to replace. So if you're stuck in 9 to 5, it's a great side hustle to take a look at. Now, how do you build wealth immediately using this strategy? Airbnb short-term rentals, it really is one of the few strategies where you can start making money month 1. So what do I mean by that? With rental arbitrage, all you need is to convince landlords to rent the apartment to you, get some lease concessions, buy furniture, and use no interest credit cards to set up the units, and then you can be operating in less than 10 days and enjoy that cash flow from the property. You can also use this strategy if you own vacation rental properties. Say you own a property in Florida by Disney where you like going to Disneyland every year. Well, you can take that property, use that to Airbnb it when you're not there, and when you want to go, just block off some dates and you can go down and enjoy the property yourself. Again, I want to hit back to the point of this is one of the few business models that I've ever seen that you can be profitable day one. And it doesn't require a huge upfront cost of money or time. Now, you can start with any budget. We did a combination of 2. We started with rental arbitrage to learn the business, and then after we did it for a few years, we were able to save enough cash and, importantly, show the bank that we had a real business that they would lend to us, and we've used that to buy the 6 vacation rental properties in the Smokies. Now, buying and holding, what are the key aspects of that using that as a successful strategy? 2 things. You got to decide which market you want to be in, right? So that takes work in figuring out where, the regulations, how saturated it is, and underwriting. After you find a specific property, how much do you think it's going to make? What are your expenses going to be? What is the cash flow it can produce? And if that cash flow can do better than the mortgage you're paying, that is a great investment, and that is good debt. Rental arbitrage is a lot easier to start, right? if you can start with a studio, a 1-bedroom, a 2-bedroom. So typically in Philadelphia, we do 2 bedrooms. Excuse me, we actually do only 2 bedrooms in Philadelphia. It costs about $10,000 to furnish and takes about a week to set up. But with a studio, you're probably looking at $5,000 of setup costs, $1,000, $1,500 for a deposit, and with that, you're ready to go. Now, the key part of that is how do you convince a landlord to lease you that property so you can Airbnb? And there's some nuances to that which I'll kind of touch on later in this presentation. You can also co-host. So co-hosting doesn't take any money, but it's hard to start. You need to go and convince someone that has the property, either an Airbnb or they're renting it through a traditional property manager, and allow you to take that property to Airbnb it. So it takes a lot of trust to build that, especially if you haven't started yet. Now, people have asked, should I partner with someone? And my view is you should only partner with someone if they have something that you don't have. So what does that mean? If you don't have enough money, you need $5,000 to start, there's a capital partner you can use. If you have money but you don't have the time, find someone that has Airbnb experience that wants to do this and partner up with them. But if you have the money, you have the time, you have the desire, you have the motivation, you can do it yourself. You don't need a partner. So cash on cash returns, what does that mean? Cash on cash returns is how much cash do I earn on an investment over 1 year? So if I make $10,000 on a $100,000 investment, that's a 10% cash on cash return. And a cash on cash return is the most important metric in real estate investing, especially in Airbnbs. Now, we underwrite to at least a 30% cash on cash. For rental arbitrage, it's actually infinite because we get the cash back basically within the first 2 to 3 months on the furniture cost. It's that cash flow positive. And then, so once you get the cash back, you actually don't have any capital invested, and it's an infinite return. But mostly when we buy and hold, our minimum cash on cash is 25%. Now, most long-term rentals, if you buy a house and you rent it to a long-term renter, you're looking at the 8 to 12% return. If you invest in an apartment syndication, you're looking at kind of 15 to 20% returns on IRR basis, not cash on cash. And that's a key distinction, which I'll hit on in a different video. But again, I want to go back to rental arbitrage. It can be up to 300% and even greater than that because there's no down payment. All you need is the furniture and the first month deposit. And you can mitigate a lot of that with lease concessions, no interest credit cards. There are credit cards out there that offer 12 to 24 months of free financing, and you take that cash flow and you can pay it off, once you've got your Airbnb unit running. Evolution of technology. Why Airbnb now? Airbnb started in 2009, but the professional managers really didn't get in until 2015, 2016. So we're still kind of in the early phase, and using a baseball analogy, we're probably in the third or fourth inning of this. So it's still relatively early and still a great opportunity. From when we all started, you would just use the hotel. If you wanted to go to Disney, you wanted to go to Smokies, you would book a hotel, and that would be really the only accommodation option. Now, if you had a family, you might need to get 2 or 3 rooms and try to ask the hotel front desk to put you all together. But if not, then it's just a very difficult experience to go. And if especially if you have a young family like I do, we want to be in the same room together, same house, same kitchen, same living area. And that's really the evolution of being able to hotels being the kind of primary option when you travel to now Airbnbs, homes, apartments. Gives the consumer a lot greater choice. And if you look at other examples like cable TV, right? We were all stuck with cable TV before, and now everything's delivered over there, whether through Netflix, YouTube TV. Instead of spending $120 a month on cable, YouTube TV, $50 a month, you can have it on 6 screens. And of course, the ultimate example, taxis, right? You had to stand outside and wait for a taxi or wait 30 minutes. Now you just go on your phone, you order Uber, you walk downstairs, you walk outside. 5 minutes later, there's a car there. It takes you to where you need to go. So Airbnb is here to stay. Right? This is something that's still relatively new, and there's an opportunity for entrepreneurs to develop a brand, buy property so they can build a business for themselves before all the big companies come in and dominate like they always do. But there's a good 5-year horizon here that you can use to build your business. Now, self-management really is the key to cash flow, right? You don't need a local property manager to manage your short-term rentals. Again, I live in New York. My properties are in Philadelphia and Tennessee. Philadelphia is a 2-hour drive. Tennessee is a 12-hour drive. Now, I only go down there when there's an emergency, which basically never happens because I have people on the ground there that handle everything. Or I go down there when I get new properties in Philadelphia for rental arbitrage, or we buy a new property in Smokies. Now, that being said, you do need an on-the-ground presence, right? You don't need to be there, but you need people that you trust that work for you down there, namely house cleaners, handymen to fix issues that always come up with the AC or a broken table, broken bed, runners that can go to Costco for you, can go to Target for you to get things that you may need, or maybe a battery, a door battery runs out, you need to go get some batteries, so you need runners. So there's the kind of 3 main things that you need, but everything else you can really manage remotely. You can really manage from anywhere, and that's really the beauty of this. We live in New York, and we go on vacation, but we never really have to be down in Philadelphia or in Tennessee, and that really opens up possibilities for this to be either a side hustle where you have a job but you want a second source of income, or once you get big enough, this is the main business and you don't want to relocate to a market that's a good vacation rental market. Say you have kids in school, you have a life, you have you have roots down in a place. I'm 42 years old. Moving is not that easy. If you're not in the same situation, being able to operate a business remotely was a key consideration for us. Now, if you use a property manager, they charge 20 to 30% of your gross revenue. So say, your Airbnb can make $100,000 a year, you're paying $20,000 to $30,000 to them to manage it, and that's all your margin. If you did that, there's really not a lot of money to be made in this business model. The great thing about it now is all the software has made it possible for small investors like us to build a business with a few people and enjoy the cash flow for ourselves versus giving it to another company to do. Now, for us, we focus on scalability and consistency. So what does that mean? First, I very much believe you make money on the buy. What does that mean? You make money when you first buy the property or you first lease the apartment, right? Because you've done all your research up front. It's the right market, it's the right apartment location, it has the right amenities, you set it up correctly. You do all that upfront work, and the rest of it is just execution. So if you get that stuff wrong in the beginning, you're just swimming upriver, every single time, and it just makes for a difficult experience. You want to be in the top 50% of the market. As the space continues to grow and the economy may slow down, there's always going to be business travel. Even in COVID, there was always going to be business and social travel. So if you're in the top 50% of the market, you're going to be fine, right? You don't really want to be below that, because then you're just competing on price, and that's a slippery slope, and it makes it be a very hard business because the lower prices attract lower quality guests, and it just becomes a very difficult situation, and you don't want that. Lastly, we really focus on what amenities people really care about and what will they pay for. So in Philadelphia, we focus on 2-bedroom, 2-bath apartments because that attracts a certain type of traveler that we like. It's either a family that wants 2 bedrooms for the adults and the kids, and it has a living area and a kitchen, or it's business travelers where it's 2 groups that have their own bathroom but have a shared living space. They can go to a conference, but they can work have a common space to work together. Free parking is very important, and 10 minutes from the city center. So that's the avatar of the properties that we want, that we know we can operate well in. And again, that's the making money on the buy. Our Smoky Cabins, we really care about having great community amenities and being 10 minutes from the Parkway. The Parkway is kind of the where all the attractions are. But we want to make sure there's a nice pool, there's a putt-putt course, so that when people go, that they have a great cabin to stay in, but they have access to a pool, to putt-putt course, to an indoor heated pool during the winter, which is a great amenity and drives really good margins for us. Now, there's a lot of talk about Airbnb market saturation and the economy. Are there too many Airbnbs? Or am I too late? And really depends on the market that you decide to invest in. And I'm going to show you a few tools that I use to see if certain markets are where I want to continue to invest my capital. I'm going to go through the Smoky Mountains with you, but I also really like San Antonio. We're doing a lot of work on that. Now, the economy. Look, no one has a crystal ball to say how the economy is going to do 5-10 years from now. Right now it's July 2022, and things are still great, but with inflation the way it is, the Fed raising rates, we could have an economic slowdown. But real estate is a long-term game. It is something where you can use to build generational wealth. And if you underwrite it properly, you learn how to operate it, now is as good a time as any to get into Airbnb rentals, real estate, short-term real estate investing. Recession, inflation. Inflation could be actually a good thing for Airbnb hosts, because then you can, the more as prices rise, you can charge more, although your costs will increase. Recession, that obviously is a real headwind that we need to pay attention to, because leisure travel is the first thing to go in a recession. But again, if you're buying right in the right location, if your property will cash flow for the mortgage payment, you're gonna be totally fine. And if you buy low in that market, and as the market continues, when the market recovers and rises, you're going to be able to really enjoy a low basis. And there's a ton of there's a ton of tax benefits that you can enjoy to shield your W-2 income and shield your Airbnb income from federal taxes. So how do I evaluate properties? I'm going to walk through quickly how I look at when we bought our last property in the Smokies, looking at AirDNA and looking into underwriting. Let's go here. So this is Sevierville. So this is the Smoky Mountains, and you can see it is a big vacation rental market. And I like markets that are big because there is safety in numbers. It's a well-established market. There's tons of amenities in here. You don't really want to be by yourself in a market with only a few people there. And if I look here, you can see, first of all, in the overview, it's a A- market, which is good. It's very strong occupancy. You can see the demand growth here. The number of nights booked continue to increase. So if I look at June here, 163,000 nights. If I look at June the year before, 127,000 nights. So you can see the market's grown 25%. That being said, the supply has grown as well as people learn about this market and continue to grow. So there are now 8,200 listings, whereas in June there were 6,000 listings. So about another 20% increase. So this is my investment calculator. This is how I used to underwrite all my deals. So we just closed on this property in July 2014. We paid $690,000 for it. We financed it with 90% LTV loan, so we put 10% down. There's closing costs, points on the loan, and work we need to do for the cabin. So we're going to put in about $90,000 into it, but we think that it can generate up to almost $140,000 of gross income, because it's a nice pool, it's a great location, and after all the expenses, which we estimate to be about $45,000 a year, and the property expenses of $10,000, it gives us a NOI, a net operating income of $85,770, and then taking into account the mortgage, which is $47,000 a year, or about $4,000 a month, we think this property can generate $38,000 of cash. And if we take the $38,000 and divide it by the $87,000 that we put in, that gives us a cash on cash of 44%, which is excellent. It is, if you talk to any real estate investor, a 44% cash on cash is unheard of, and that is the beauty of Airbnb real estate investing. So let's go back to how do you get started? Well, first of all, there's a bit of a self-reflection. What strategy fits you the best based on your situation? Is it rental arbitrage? Is it buy and hold? Is it co-hosting? Now, if you're just starting out, you don't have a lot of money, rental arbitrage definitely is the way to go. It is the fastest way to get started. You learn the experience. You don't need that much money to get started, and you can build a business and reputation in order to kind of graduate to the next step of buying and holding property. Because once you buy property, there's a lot more cash going in, but there's a ton of tax benefits and appreciation you can enjoy. Second, you got to learn the skills, right? It's not hard, but there's definitely skills that you have to learn, and then when you get started and you have the experience, that will help you grow a successful business. There's a lot of free content online on YouTube that you can go, and there's paid content too. There are courses that you can pay for that show you how to do this and do this quickly. So there's a balance there. You either take longer to look at the free content or pay for content and learn faster from someone that's done it before. And lastly, the most important thing is you only learn by doing. There's only so much research you can do, but there's a time when you take all that learning and you just go and do it. You call the landlords, you buy a property, and you set up your Airbnb and you run it. There are a lot of hosts out there that's been very successful, so it's not rocket science. You just got to get out and do it. So I hope this has been helpful. This is my journey, and I'll continue to post videos on my social media, on my TikTok, on Instagram, with more tips on how on our Airbnb journey and how you can get started. Thank you for listening.